Hi, my name is Jim Evans, President of Gannon Security Partners. Thank you for taking some time out of your day to watch our video. Our videos are to help you understand the strategies you need to help protect you, your family, your business, and future generations. Those strategies will be all wrapped around retirement planning, estate planning, tax mitigation, and asset protection. I hope you enjoyed today's video. Please don't forget, subscribe to our YouTube channel, follow us on Twitter, like us on Facebook, and make sure you leave comments below so that we know exactly what you want to know. That's what we're here for. Thanks again, and enjoy today's video. Hi everyone, and welcome back. My name is Jim Evans, President of Gannon Security Partners, and today we are talking about required minimum distributions, RMDs. The IRS says that any qualified money that we have, so that's your IRAs, your individual retirement accounts, your 401ks, your 403bs, maybe qualified deferred comp, pension plans, those types of things, they require you at a certain age, the year you turn 70 and a half, that you must take a distribution. The reason for that is because all of those years that you have been putting money into your pension plan or putting money into your profit sharing plan or putting money into an IRA or a 401k or a 403b, whatever it is that you haven't been paying taxes on that income that you've been putting in there. You've been getting a deduction up until a certain point. So what the IRS says is, hey, listen, we're allowing you to put the money into these plans. We're allowing you to get a tax deduction. However, at some point, you got to take that money out so that we can actually tax those monies that are sitting inside those accounts. So they instituted a required minimum distribution. In the year in which you turn 70 and a half, you have to take your first RMD. Okay, so now that we know what it is and we know why the IRS forces us to take a minimum distribution, a lot of people recently, because you're getting towards the end of the year, you have to take your RMDs by the end of the year. If you're age 70 and a half or older, they've been saying, how do I know how much I have to take out? Why can't there just be a calculation that I can do without the carrier or the institutions that are holding my money telling me what the RMD is? So here's how you do it. So there's a factor, there's a ratio that you need to know. So we're going to take 70 and a half first, okay? So we're going to make it really easy numbers. Let's say we have $100,000 sitting in our IRA. The year we turn 70 and a half, this year we turn 70 and a half. They are going to say, okay, you need to make a required minimum distribution. We do that by dividing this number by this number right here. So 27.4. So very simply, we're going to grab our trusted calculator. We're going to put $100,000 in. We're going to divide it by 27.4, and that is going to equal 3,649. So we have to take out that year, so that we're not penalized, $3,649.64. That is our RMD for that year. Now what I showed you over here is the number actually goes down, which tricks people, because it's division, not timesing it. So it's not multiplying, timesing. Listen to me. Okay, so because it's going down and we're dividing it, this number is going to go up. So let's say, for instance, you're 90 years old. Oh, shouldn't erase that 100,000. Let's say you have $100,000 and you're 90 years old. Okay? So you're 90 years old, you have 100,000. Now you're going to come down here, 11.4. We're going to take the 100,000, divide it by 11.4, and we get 8,771.93 RMD. Okay? Now, you'll notice here that as you get older, the same amount, that didn't change. The factor went down, which required us to take more out. So the IRS is saying the older you get, the more we want you to take out, because we want to have an opportunity to tax this money. remember, when you have a qualified plan, 100% of this is taxable at your highest marginal tax rate. Now, what do I mean by that? I don't want to get into a tax conversation, income tax conversation, but as you make more money, the income tax brackets go up. So you might start out at 0%, then 10%, then 15%, then 25%, then 28%, then 33%, right? It's going to go up. Well, this money is going to get added to the end of whatever you make. So for instance, let's say you make $40,000 that year, and you take an RMD for $8,700, just to make it easy. This $8,700 is going to get added to the end of it, which means this is your highest marginal tax rate. The reason for that is, again, the IRS said, listen, we allowed that money to grow tax deferred all those years. We want an opportunity to tax it. So if you have questions, I'm going to put on our website the RMDs for 2016, and I'm also going to put it in this presentation right now. You see it? Okay, there you go. So I'm going to leave that up for a couple seconds here, allowing you, if you want it, we can always email it to you. But if you have an RMD that you have taken out this year, if you have a parent that's taken RMD out this year, if you have a grandparent that's taken RMD out this year, this is going to allow you to calculate it. Last thing, before we go, big factor here is December 31st of the previous year. So that means in 2015, if my account was $100,000, this is what my RMD is based off of. The reason they do that is because it would be impossible to figure out during the year what the RMD should be based off of. So for instance, let's say I have $100,000 December 31st, 2015. Now, January of 2016, it's 102. Then February, it's 99,000. Then it's June, and I have 104 because the market could go up and down. So they make it easy for you, and they also make it easy for you to plan. Because December 31st of the previous year, you now know exactly what you have to take out the following year. You can calculate it very easily. You'll get a statement from either your carrier or your investment company or your financial advisor. They'll give you a statement saying end of year 2015, end of year 2016. Then that's the number that you know that next year you're going to use this number, the one that I just posted on the screen, depending on what age you are. And that's what it's going to tell you your RMD. I'm running out of breath. So excited about RMDs. Okay, so again, thank you so much for watching our video. We're going to keep posting them. We keep on getting more and more comments. I love it. I cannot tell you how much I appreciate everyone sharing our videos, complimenting the videos, commenting, giving suggestions. I want all of that. Okay, so it's the end of the day. I'm running late. I have to go to the city, but I wanted to do a quick video on RMDs, required minimum distributions. The IRS says so. Thanks so much for watching. See you next time.